Okay, good morning, or maybe it's good afternoon. I've just been lucky enough to have been invited into a Bank of England roundtable with the governor of the Bank of England himself. And the session was so interesting and so useful that I thought I would just share with you the keynotes that I took out of the event this morning. And just bear with me, just checking my live. Nope. So what was interesting, this session is one of a number of events he's doing around the country, virtually at the moment, obviously. And he gets the feedback from all the small companies he talks to, and he takes that back to government, which is really helpful. And he said that he finds these sessions really, really important, and he actually learns a lot from doing them. And he referred back to our introductions and what we're finding out there quite a lot during the session. Now, what he was saying is that the impact of this lockdown has been less economically than the last one. So there's been less impact on the economy from the last shutdown in March, which he says shows that people are adapting. So obviously we were in great shock in March. This time we knew more of what to expect, but he just shows the resilience and the adaptability of how we're coping with this. But of course, there are very uneven patterns across the UK, whereby obviously some industries and some areas are doing much better than others, and some areas are obviously still in complete lockdown. He talks about the labour market. He said it is quite difficult to read at the moment because of the number of people on furlough and just the difficulty getting the information. But they think the real unemployment rate right now is around the 6 to 6.5% mark. And he does think that that is going to increase as we go through the year, as things like the furlough scheme unwind, and as some of the more permanent structural elements of the hit to the economy take hold. I'll mention a bit more about that in a moment. He talks about the big build-up in savings across the country. Currently, there are about £125 billion worth of extra savings amongst households in the UK, and this figure is still rising. He said, interestingly about this, that it's mainly higher earners and older people who've got these savings. And the history tells them, and other parts of the world who are recovering, shows us that these savings aren't coming back into the economy necessarily. They're only looking to see about maybe a 5% of those savings feed back into the economy, because the demographic of who's holding the money is more likely to be holding on to it. They are expecting a very strong recovery, and they think it will start lifting really end of Q2, start of Q3 this year. But it's very much going to depend on people's caution and their fear of re-engaging really with the economy and society, given the vaccine and the COVID risks still. And the big risk really he sees to the economy is the mutant strains of COVID that are outside the vaccine protection at the moment. And it's going to take at least another year for us to get back to pre-COVID levels, which I guess is no surprise, really. He talks about the big challenge to the economy being investment. Investment really is the absolute driver of the recovery. And investment has already been very low for the last 10 years, along with the weak productivity growth that gets talked about a lot. And it really is this challenge of businesses coming out of COVID with high levels of debt, high levels of uncertainty, but the need to invest, because that's what's going to drive the economy. So he's really talking about the government needs to make sure that that support is there to allow people to make that investment and to take advantage of this strong recovery that we are expecting. He talks about long-term scarring and structural damage. And by this, he means that things are going to have changed permanently because of the COVID crisis that we've been through. So particularly, he talked about retail, in as much as it will go back somewhat, but it is never going to go back to how it used to be. That shift towards online is going to be partly very permanent. And he talked about the scarring being, the long-term unemployment, the shift out of office space into more people working from home. And he talked about his own office and his own colleagues within the Bank of England. They've all expressed a preference to come back to the office sometimes, but work more from home and have that life balance that they've been enjoying. So he really does see that being a permanent scarring and a permanent change to the economy of the office space. We're just going to need less of it going forward. And I'm certainly seeing that with clients who are looking at giving up office space now and certainly lowering their footprint. He talks about interest rates, which has been a big topic, I think, this week. And I've been very much interested in what's going to happen with interest rates, with all the talk of negative rates coming up. And he was saying, we've had 10 years of very low interest rates, and he does not expect to see that change for, quote, a long time yet. So he's not looking at a high increase in interest rates. So that is really good news for businesses, especially if we are borrowing money. and also for our mortgages as well, keeping our take-home pay stable. And the negative interest rates, that gets a huge amount of press. He's saying, although it's a tool in their toolkit, it is not something they are contemplating at the moment. So I think we can stop worrying about negative interest rates and what that might mean for us. He just said it's just not something they're considering right now. He talks about the impact of the long-term economic scarring, so the permanent impact of COVID that we won't recover from. And they're estimating this to be about 1.75% of GDP. So it's not huge, but I guess it's all context, isn't it? But their latest forecast, I think that's going to be the element of permanency we'll see of coming out of COVID. Obviously, all depending on how strong the recovery is and how quickly we can, I guess, innovate into different areas to compensate for that. Now, I got to ask a question. So I asked, of course, what did he think the role of small business was in the economy and the recovery? And he stressed that it was very, very important indeed. The role that we play as small business owners is hugely important to the economy. And it's really about us feeling that we have the confidence to invest and be able to take advantage of the strong recovery. And that we should certainly be looking for opportunities to invest to support that recovery and to take advantage of that recovery. So I think it's really important now that we are starting to think longer term, get our heads beyond where we are now and really thinking about what comes next, where the recovery is, and how we really start to position our businesses to take full advantage of that and start to really think about how we can invest going forwards. So that's my précis of the conversation I've had this morning with the Governor. Interested in your feedback and your thoughts, so do let me know in the comments. I'll see you soon. Bye.